As of November 21, 2024, US crude oil faces bearish pressures due to strong production growth, especially from non-OPEC countries like the US, Brazil and Guyana. OPEC Plus cuts have struggled to offset oversupply, keeping prices subdued. Geopolitical risks remain on an upside factor, but supply outpacing demand is still dominant theme heading into 2025. Simultaneously, the US dollar has shown resilience, supported by strong domestic economic data and the Federal Reserve's hawkish tone. Persistent inflation concerns and a robust labour market reinforce the dollar's appeal, although global risks and potential policy shifts in 2025 could create volatility. This combination of flat oil prices and a strong dollar underscores a delicate balance of economic and geopolitical forces in global markets. G'day folks, welcome back to another update for US crude oil and the US dollar. Before we go any further, make sure you hit that like and subscribe button to support the channel and stay to the end of the video to see what we offer for the Patreon viewers. So here we've got US crude oil on the monthly, weekly and daily trend charts. So on the monthly, first off, you can see the price is well below its moving averages. Likewise, the CCI 150, which is our major trend indicator. That's giving us a bearish signal, so predominantly bearish on the monthly. On the weekly, likewise, both the CCI and the moving average on the price chart are below the moving averages. That's also bearish on the weekly. However, on the daily, we actually previously hit this major support at 64.80, and since then it's actually bounced and now struggling to go higher. We did have a bullish divergence here, still in play actually. Higher lows on the CCI versus a double bottom on the price chart, and that actually bounced and hit our minimum target retrace level. And that retrace level, we draw a Fibonacci to the previous high before that divergence started, and that's a 23.38% retrace we have reached. Now, it can actually do one of two things, obviously. It can actually break through that and go higher, and if it breaks much higher than a 61%, then we're going to consider it a potential reversal from where it is at the moment. Or if it retraces back to the downside, then it's actually hit that target range and then bounces back down and continues a downtrend. But notice also the CCI 150 is broken above its moving averages, giving us a somewhat bullish signal. So we possibly may see higher prices from here in the short term at least. Now, if we go to the intraday chart, remember one of the golden rules is we always trade in the direction of the higher time frame. So we only take long trades. At the moment, the CCI is broken above its moving averages, and we only take long trades from here on. So if that CCI on the 1 hour chart breaks above its moving average and the price, then we take a long trade. You'll notice here as well we had a couple of different bullish divergence, and both have worked and hit their targets. That first one is a lot steeper on the CCI versus lower lows on the price, bounced, hit the 23.38% target range. If I draw the Fibonacci from that high down to that low, you can see there the 23.38% was hit, and the second range we had was down to that level there, and that's also been hit after we had another bullish divergence there. And that's doesn't always happen. Also, these divergences are independent from different time frames, so we don't often see them on different time frames. Sometimes they align, and most of the time they don't. So this has also hit the 23.38% target, and it's actually bounced off that 50% target at the moment. So fluctuating around the 38%. So at the moment, the hourly is showing a neutral signal after being bearish for a number of hours. So we possibly may actually break higher or lower. Again, we'll let the CCI and the price dictate where it will go from here. So the US dollar, first on the trend charts on the monthly, that's actually got a fresh breakout above the moving average, a very narrow moving average range. Likewise the price, and that was after we had a bearish divergence here on the CCI. Lower highs versus high highs on the price, dropped, hit our 23.38% target range. You'll notice it stayed in there for a couple of years actually, fluctuating in that 23.38% range. And at the moment, it looks like it's going to break outside of that range to the upside on the monthly. So now on the weekly, we also have a bullish movement trend on both the price and the CCI, so bullish movement only. And on the daily, we had a bullish divergence down here versus lower lows on the price after hitting this minor support at 99.83, bounced, hit our 23.38% target. In this case, it's gone well beyond 100% retrace level and hit this major resistance up there at 10.676. And here we see it's actually weakening at the moment. The CCI is broken down into the moving average range, giving us a neutral signal. So avoid going long. I'd wait for it to break above this resistance to go long, for, assuming that CCI breaks higher and that this breaks through that resistance, and I'd start taking long trades from there. And if we go to the intraday chart, you can see here more closely we had a bearish divergence, so lower highs on the CCI versus higher highs on the price, dropped, hit our target range. And again, if I drew a Fibonacci to that low, you can see the 23.38% target was touched, then bounced out of there. Now that was after being that bearish divergence, as I said. Had a small little move to the upside, and now broken down again to a bearish outlook. Now at the moment, we may see further declines. Plus, let me just get rid of that Fibonacci. Plus we had another bearish divergence here, just historical purposes to demonstrate higher highs on the CCI, on the price versus lower highs on the CCI. Broke down, hit our target, touched that range, and then it bounced out of there. So again, you can use those to potentially either close out positions or potentially look at where the price will go from there. Now at the moment, it's bouncing off that current area of divergence, and again, I'd like to see it break through that resistance to be more positive and bullish. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.